Broadcast. Welcome to the 17th episode, not the 16th, not the 15th or the 18th, but the 17th episode of the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I am Joe Nikruto, and I'm here with
Dan Hussey.
And
I'm Ted Seifried.
Ted Seifried in the house.
In case
Welcome,
you haven't
Ted.
seen him before.
Hey, Ted.
Hi.
A few of you might have heard of him. Today, we're talking about WASDE. July 12th, WASDE struggled mightily to figure out what the surprise could be.
At least they got the report out on time today, and we didn't have to go to Cornell to get that report. But, steps in the right direction.
Thank you, Lance Honig.
Struggled for days to think about what the surprise might be, and sure enough, they provided us with a surprise, strangely enough. Quick update on where the markets ended for the week. Corn in December, we opened the week at 423. The high was 423 3/4, low 403. Last trade I saw was 416 1/4 in December corn. That's down 7 3/4. Funds came into the day roughly short 366,000 contracts. Beans for November opened the week at 1124.5. High was 1125 1/4. Low 1059 1/2. Last trade 1064 1/2. Down a whopping 65 1/4 on the week. Funds short about 170,000 contracts in beans. Meal August contract opened 357.10. High was 357.20. Low 335.90. Last trade I saw 338.20. Down 19 on the week. August meal funds long still 61,000 contracts. Bean oil August opened at 49.62. High was 49.62. Low trade for the week 46.21. Last trade 46.62. Down about 50. Funds short 71,000 contracts. Dees wheat opened 589 1/4. High 590 3/4. Low 550. Last trade 551 1/4. Down a whopping 39 1/4 on the week. Funds short coming into the WASDE about 80,000 contracts.
Big day lower after being almost up 20 on the wheat there. I mean, what can you do? Wheat doing wheat things. Corn, outside day higher. A lot of people are going to say the key reversal here is in. It's arguable considering the actual low for the contract's 398.5, but that was back in 2020, right? So making that almost $4 low, 404, I think, and a half. Lows here this week with an outside day higher could be a key reversal higher for corn in the short term. But you really got to have to ask yourself, how high can this dead cat bounce at this point, right? You've got prior lows there from February at 445, the 18-day moving average at 431 to kind of play devil's advocate for where we can go. And let's not forget this entire sell-off, not the entire, but the recent sell-off of the last 2 weeks coming and starting after that June acreage and quarterly grain stocks report from around that 440 area. So, maybe a bounce back towards 430 to 450, somewhere in that capacity is the capabilities of any kind of technical bounce, but it's still a downtrend, and one day up does not, a reversal necessarily make.
10-day moving average we bumped into with the 18-day, another 15
cents higher. The 10-day was right around, we actually closed above that here by about 2 pennies. But that was resistance for the last several weeks on the way down, that 10-day moving average.
Yeah, 444 1/4 is my target for a bounce.
There you go.
I don't feel like the price action on Friday, given a bullish report, was really confidence inspiring. If you would have shown me these numbers before the report came out, I would have said corn's going to be 20 cents higher. We weren't. September corn in particular barely scratched out, a higher close. And the December corn closed, 11 3/4 off the low?
Yeah.
Not even 20 cents off the low, albeit, not quite 5 cents higher. That's so it was 4 cents higher. You had a new crop carryover that came in 215 million bushels below the average trade guess. That's 10% of the projected carryover. You'd say, you could make the argument corn should have been up 10%. It was up 1%, not quite 1%. That's a bit disappointing. I think there's a lot of people that look at this report and say, these numbers don't make a whole lot of sense. And I think that's the problem that we had. Now, it'll be interesting to see, as it always is with a Friday report, how the dust settles over the weekend and how we look at it through a new lens, going into Monday, Tuesday of next week. But we're going to have to follow through on some strength. Otherwise, you got to feel real bad about the price action that you saw after what should have been a really, really bullish report.
Yeah. And reminding viewers here, right? A key reversal is not necessarily a guaranteed move higher. Lean hogs in the August contract have had 2 key reversals this last month and were limit down yesterday or the day before. So there is no guarantee here that the technicals are going to play out the way you want, particularly when the fundamentals may be spelling out a different story.
You didn't get a key reversal in Sep corn. And I
Sure.
know a lot of people look at December corn as being the front month. It's not. I mean, and volume and open interest are pretty much evenly split between Sep and Dees right now. So it's a key reversal with a question mark is best we can say.
Yeah. And to summarize here, the report today, right? Exports were raised 75 million bushels on current outstanding sales and shipments today. Feed and residual is up 75 million bushels on indicated disappearance in the June grain stocks report. And corn production for 24-25 is forecasted up 240 million bushels on greater planted and harvested areas. And acreage acreage as well as yields came in right in line with expectations. So no surprise there. The surprise was in some of the pudding here and deeper into the coarse grains. And as Ted mentioned here, and I'm going to ask him now, where is the folly here with exports? Right.
Yeah. First of all, the big focus going into this report was yield and acreage and harvested acreage, and would they account for flooding and whatever. And I haven't heard anybody ask or talk about that since the report came out. It's all been focused on what happened on the old crop balance sheet. And to your point, USDA increased exports by 75 million bushels, and they increased feed and residual by 75 million bushels. They are saying it's because of the outstanding sales, export sales that we have on the books that have not yet shipped. And what that is 203 million bushels. Like the current number on the export sales report that we saw on yesterday, 203 million bushels above and beyond what we had at this time last year. So that's a lot, 203 million bushels. But if you look at the USDA's carryover number, old crop carryover number that they gave us today, compared with the quarterly grain stocks number that we had left at the end of Q3, that implies that we're going to have a fourth quarter disappearance of 3.1 billion bushels. Last year was 2.75 billion bushels. That's a difference of 360 million bushels. Yeah. So even if you want to say that additional 203 million bushels is going to get exported, those unshipped sales are going to get exported between now and the end of August. That's a month and a half. Not a lot of time. And export inspections aren't suggesting that that's going to happen, by the way. But even if you say every single one of those 203 million bushels are going to get exported, it still leaves you 157 million bushels of where did that come from? Where are we going to make up that 157 million bushels in the fourth quarter of a marketing year? And you could say, well, feed, and the USDA kind of did say feed, but do we have more animals out there than we know about? Are we feeding corn to, significantly higher weights than we are reporting? If that's the case, somebody needs to tell the cattle market, which was higher on Friday. I don't know. That 157 million bushel, and again, I'm going to say, on my estimate for this ending stocks number, I accounted for about 180 of those 203 unshipped bushels to be going. But I'm still above a 2 billion bushel carryover.
Pretty generous there in your own.
I think so. Yeah. I mean, I think a lot of those outstanding export sales are on the books because of concerns about the Brazilian second season corn crop, which ended up being good. The USDA left that unchanged today. CONAB actually raised that second season corn crop earlier in the week. And then also Chinese dryness issues. But if it turns out that the Chinese feel very comfortable that the Brazilian corn's there, they might not need some of those. And it's not just China that's out there. There's a lot of unknown destination stuff. But even other countries, doing the same thing, hedging bets against that second season corn crop that ended up being okay. I'd say there's going to be a fair amount of cancellations, or the potential or possibility of a fair amount of cancellations. Again, even if you consider that all of those bushels go, you still have 157 million bushels that I don't think can be accounted for in feed, not all of it anyways. So that means it goes into the residual category. So that means that when we get to the September 1st quarterly grain stocks, i.e. old crop ending stocks, very likely you're going to see one of two things: either a dramatic revision higher and that old crop ending stock number go back above a 2 billion bushel carryover, or they're going to have to really look at last year's production and lower that. Now, I know a lot of people are going to say immediately, oh, that's
They
it.
should
That's
do
the
that,
ticket.
right?
Yeah.
We're all thinking it was
177.3, right? But in order to do that, they'd have to go back and revise their on-farm quarterly grain stocks number. Maybe. I'd say that's the while that might make a lot of sense to people, I'm also going to say that's the much more unlikely scenario, right? I'd say there's about an 80% chance that old crop carryover ends up back above a 2 billion bushel or close to it. And if that's the case, that really puts a lot of bushels back onto the new crop carryover. And, now we can have the yield conversation and, okay, we lost some harvested acreage because of flooded out acres, but man, I'm hearing people start kind of rumbling about the possibility of actually beating the 181 national average yield. So I don't know, I wonder if the report that we saw today for both old crop and new crop carryover, maybe that's the best case scenario that we're going to have. Maybe those are the lowest numbers that we're going to see. Either way, I've been quoted many times, or I've done a lot of these things where I say, hey, the USDA is not perfect, but these are the numbers that we have to trade. And you can argue them all you want, but this is what the market has to trade, right? So I'm optimistic. I'm hopeful that this is the jumping off point for a bit of a recovery, relief rally to give producers an opportunity to sell all these unsold old crop bushels and really get more marketed on new crop. Because if not, and if those on-farm storage numbers are accurate and we've got a carryover and a half sitting on farm, that's a lot of bushels that are going to have to come to market before the end of August. That could put a lot of pressure on the market and push us into prices that we are almost unfathomable. So yeah, I'm hoping for a 40 cent rally. I'm not brimming with confidence about that after the price action that we saw on Friday, but I'm very hopeful that we start next week on a strong note. If not, though, you got to get ready to say, okay, fundamentals are one thing, USDA numbers are one thing, but price action is the ultimate decision maker. That's the ultimate leading indicator. You have to be ready to take action if prices aren't doing what we want them to do early next week.
So in a year, folks, where the prices haven't been what you wanted them to be prepared to take that action here if given the opportunity to get sales done, to do what you need to do, because we know there's a wall of grain out there potentially, to beat this market back down.
Literally.
Yeah, literally. So South American crop production, Ted mentioned there, Argentinian, Brazilian numbers right in line with expectations. 52 million there for the July Argentinian corn.
That's down 1 million metric tons.
Oh, from last month exactly. Brazilian down, actually in line with June, unchanged. Down 500,000 there for Argentinian beans and unchanged in the Brazilian number. So USDA staying strong and firm with what they're saying. With CONAB coming up. I mean, just a quick thing. What kind of the discrepancy has been big? I mean, who is a little more off here?
Well, okay. So first of all, the Argentinian corn number coming down 1 million metric tons was expected. In fact, the average trade guess is for 2 million metric tons. And that's your leaf hoppers showing up. Woohoo. But the Brazil corn number at 122, CONAB has been raising their number. At one point, there was about a 15, almost 16 million metric ton difference between where the USDA was and CONAB. And that's unusually large. We do expect to see the difference between USDA and CONAB. We've talked a lot about that before. That's due to reporting, and CONAB is a very limited fund or limited resource agency. They don't get as good of a view in northern Brazil as I think they should. The USDA's even said that. But now that discrepancy between the USDA and CONAB, the CONAB's a little over 116 million metric ton. I mean, now it's very much within the realm of expectation. So I think we finally have USDA and CONAB numbers close enough together to say, okay, this is an accurate representation through two different interpretations, but it's an accurate representation of that Brazilian corn crop. I don't think we can say there's any surprise reductions coming for that second season corn crop in Brazil. And again, I'll go back to the export sales that we have on the books. That could be a reason why some of those sales don't actually get shipped.
Sure. And just to give everybody a rundown of our U.S. crop production numbers, I mean, really no change there on the yields since our last reports. 181 for corn, 52 for beans. The slight change in adjustment at most of the trade, and everyone was expecting anyway, because of the higher acreage report there. Harvested acres slightly higher. Production came in at 15.1 billion for corn and 4.435 billion for beans there. So not much out of the way in terms of the production side. And as Ted alluded to and talked about there, a lot of the, you had to see the forest from the trees here to see where there's changes in this balance sheet. And arguably the corn report was bullish at face value, but as you dug a little deeper, maybe it wasn't as much so. So, Ted, unless there's anything else that you want to cover here for the WASDE report, thanks for joining us.
Sure.
It's been
real quick,
pleasure.
just on soybeans. It was a slightly friendly report, both for old crop and new crop
we
beans.
spent so much time on corn. We got to give beans a little bit of attention here, right?
August beans down 12 cents though at the end of the day, only a penny or so.
Certainly
off
into
the
end of the day really hammered that.
Yep, new contract lows. That's not a good sign, and also sort of a capitulation in that wild inverse that you had between August and November beans. I think that's suggesting that cash bean movement is now starting to happen. I think we were all kind of holding out, hoping for that, August rally to $13, but the remnants of Hurricane Beryl that got a lot of the drier areas in the east, I think that we're seeing some throwing into the towel of the hope for a bigger rally in soybeans.
Yeah,
also,
no need for weather premium when it's raining.
Yeah, and we know we got to make some movement now. So you look at, guys look at corn prices and are just disgusted, and they say, well, there's still an 11, at least on the board, and old crop beans, okay, let's do that instead. And I'm going to say, I think this report from the USDA probably is going to keep us from selling cash corn. So I would expect to see more pressure on the old crop beans. I think that spread's going to come in, which longer term is not a bullish thing, even though maybe November might have some support underneath it for the short term. Other than that, I think we've covered the report pretty well. So
yeah,
I'm I scratched a mosquito bite and I'm bleeding, so I'm gonna go take care of that.
Very real here.
Last thing, since it's Friday and we can go off has anybody put any credence in the mosquito index? Like this is
a wide, right? I am
the worst year for mosquitoes that I can remember.
My thigh over here too.
I don't know.
They're everywhere.
An old timer once told me that when you got really, look at that, Joe. An old timer once told me that when you got a lot of mosquitoes, that means you're going to have a massive corn crop. But
so before Ted goes, let's surprise him here with our producer Carter's question of the week here. Yep. We'll get into the rest of our news stories after this, but since we want to let Ted go.
Carter may have outdone himself on this one.
Oh, baby. That means Carter needs to chime in.
What is the weirdest talent that you had?
Me specifically?
We will all give our weirdest talents. But sure, since you're with us today, why don't you
fire away?
Oblige us with your...
What is the weirdest talent? It's a talent, though. So what is a talent? Talent is a skill that you're naturally born with?
I got it. I will start us off. So I can flick you off with my middle toes. Can you? Yeah.
That's pretty...
I can take my middle toe and flick you off.
I don't think you have to say anything. You could just...
I can flick you off with my middle toe. Yeah.
You could... Maybe we just let that...
Just let that be?
He's the winner. Yeah, he's the winner.
I bet your wife's happy.
Right.
Anywho, I have a couple of weird ones, but one that I can do easily right now. And this is learned in college, but look, I'm going to use my lighter.
There you go. And I'll give Ted credit. He can also do a Superman push-up.
I can do that. Yeah.
So, I wouldn't call it weird. I'd say that's a flex, if anything.
The camera angle's not good for that. Yeah.
Well, you can find it on Twitter if you haven't missed it here.
Yeah.
At the Ted Spread.
Yeah.
I don't know if it's weird, but I'm really good at flipping tractor tires.
Oh.
Okay.
I bet you are.
Yeah.
Joe's got some power behind him.
Yeah.
Kind of little.
All right, guys.
Well, Ted, thanks for joining us. We'll see you in a bit.
Ted.
Thank you, guys.
And perfect leeway here. I'll do our Beryl story, with the weather that has assumed. Hurricane Beryl joins hailstorms and flood-damaging crops and ag infrastructure from DTN here. For farmers in areas such as Wharton County, Texas, South Houston, and the Hurricane Beryl damaged crops as farmers were looking to rebound from years of drought, as I think has been generally the case for everyone across the country with these rains coming through. At least some producers were already harvesting crops such as sorghum and corn, or they were getting ready to harvest them until the hurricane hit. In Hilge, Texas, 3 grain bins for the United Agriculture Cooperative that had collected a capacity of 1.1 million bushels were crushed by the winds. The bins were largely empty, but prepared for harvest. So, okay, not exactly a 1.1 million grain loss there, but written, to trick you. Either way, both the corn and sorghum crops had a lot of acreage, with crops leaning the outright being flattened. So not like a derecho, but certainly hurricane winds that do the same effect, right?
Straight line winds.
Straight line winds, exactly. Yep. A farmer in Wharton County, Texas, and a board member of the Texas Corn Producers said a few farmers were starting to harvest, but most of the corn in the area was almost ready to combine. On the corn, Berglund said that it's a question of timing and how long it takes to dry out to see just how much damage there was. He added, I think there are some of those fields that are so flat we may not be worth cutting. While farmers in Iowa and other states were rocked with turmoil, rains, and floods in mid-June, farmers in other states are now posting more social media posts about hail damage from the storms this weekend. Farmers stretching across Kansas and Nebraska, South Dakota, and a few spots in Iowa and Minnesota showed swaths of areas hit as well as their own crops damaged. The frustrating part for producers, Berglund said, is that most of them in the areas, such as Texas, can only afford crop insurance that covers between 65 to 75% of the crop because they are considered to be in a high-risk environment. Well, that's just terrible. I mean, it's almost like hurricane insurance, right? Almost as preventative. Along with that, even though prices are lower, they won't kick in the commodity safety net. Producers would have to wait for Congress to pass a new farm bill or pass a disaster package to deal with the widespread potential losses this year. I would just follow that up with, we are all looking forward to seeing what the USDA and the government will do with the farm bill, as well as some other issues here, particularly for young farmers, high interest rates. We'll see if there isn't any more government money coming down the road this year, which is a perfect leeway for Joe.
I'm laughing because I'm not even sure that I can read this next story with a straight face. I'm going to be very interested to see how this plays out. But from the headline, farm businesses well positioned financially despite high interest rates.
Right? I mean,
sent to us by two folks from the USDA.
And after this story, folks, we want to hear your story, your financial situation. You don't need to get very, very in detail
comments
with it.
Down below.
But comments down below about interest rates here in this cycle, about how that's affecting, your operating loans, the struggle that might be. We need to voice this out, right? People need to hear this in government. They need to get the farm bill passed. Money and subsidies that need to help with these situations need to get out there. I was talking with a John Hussey, a farm. Shout out to John if you see this. No relation, believe it or not, but a farmer in Indiana who we met at Commodity Classic. We meet lots of people at Commodity Classic. We love to have these types of conversations. But John's well into his 60th year of farming, and he remembers when he was a young lad back in the 70s, in getting his start, back when interest rates were even higher than they are now. Right. And the turmoils and the crunch and the credit crunches that were happening at that time. So, markets and cycles, they move in these ebbs and flows. We've seen this type of thing before, and we can learn from the past and how to deal with it. Right. But with all that being said, Joe,
for many farm businesses, the amount of debt they hold is a key factor of their ability to sustain and grow their operations. Data from USDA's Agricultural Resource Management Survey, the ARMS, show that 23% of U.S. farms held debt in 2022. Total farm sector debt is expected to reach more than $500 billion. Not that big of a deal in this day and age. $500 billion, right? That's my comment, not the article. $500 billion in 2024, according to USDA Economic Research Service Farm Income Forecast as of February 7th, 2024. Data on operating profit margin, the share of gross income that is profit, show that most mid-sized, large, and very large family farms reported operating profit margins above 10% in 2022. It is now, I would add that it's now 2024. However, most small family farms had an operating profit margin of less than 10%, indicating potentially more financial vulnerability. Interest rates have risen, making the debt, especially new ones and those with variable interest rates, farmers hold more expensive. Since March 2022 until July 2023, the Federal Reserve increased the short-term federal funds rate, the interest rate banks charge each other for short-term lending, 11 times, with the target range of 5.25% to 5.5%, a 23-year high. The impact of this increase has affected the farm sector, you wouldn't say. ERS has projected farm interest expenses as the fastest growing production expense for 2023 at $34.9 billion, or almost $10 billion higher, inflation adjusted, no pun intended, than in 2022. In 2022, farm business represented less than half, 48% of all U.S. farms. Farm businesses represented less than half, 48% of all U.S. farms, and residence farms made up the other 52%. I see. Business farm versus residence farm. Got it. Yet farm businesses held 88% of the sector's total farm debt. They also held more than 70% of the sector's assets and accounted for 95% of the total value of production. Large operations typically have real estate debt and higher operating expenses financed by credit. In 2022, almost 74% of large family farms had some debt compared with 1/4 of small family farms. 60% of mid-sized family farms had some debt. Large farms are not only more likely to have debt, but also to hold more debt than mid-sized and small family farms. For farms with debt in 2022, the average debt of large family farms was more than 1.8 million, compared with 239,000 for small family farms and 783,000 for mid-sized farms. Probably mostly tied up in real estate, right?
Yeah. Right.
Debt to asset ratios
Land
vary
rich, cash
according to the ages of principal operators. Generally, older operators are more likely to have paid off their debts and are less likely to take on new debt. On the other hand, younger operators may take on additional debt to expand their operation or to adopt new technology. For the past decade, younger farm operators had a higher debt to asset ratio than older operators. Even so, the debt to asset ratio for 3 operator age categories, 44 years or younger, 45 to 54, and 55 years or older, declined or was flat in 2022 compared with previous years. Let me reread that. For the past decade, younger farm operators had a higher debt to asset ratio. Yes. Debt to asset ratio for 3 operator age categories declined or was flat compared with previous years. Understood. Even the highest average debt to asset ratio held by an age category, 15% for operators 44 years or younger, was far below the 55% threshold. So the argument that they're making here is that even your youngest operators who are more likely to hold debt because they're just getting started,
Right.
or they
have the operating
stuff to buy,
loan with the very high interest rates right
still
now.
below 55%. That was in 2022. So we'll be very interested. Not only would we be very interested in your comments, whether you are younger or older, or your experience in years past, but we would maybe like some comments to help us get a more up-to-date picture on this, as there's been a major change from 2022
through
to
today.
2024.
Absolutely.
And so if you can help us out and get us some info, we'd very much appreciate that.
So thanks again for joining us here today at the Zaner MarketCast.
Let me interrupt 1 second.
Yeah,
Carter,
absolutely. Oh yeah, let's not let him out of this one.
question of the week.
Absolutely. I'm going to take my foot out
Carter.
and show you.
Yeah, are you going to get flipped off by Dan's middle toe? What is your weirdest talent?
I can vibrate my eyes. Not showing it to the camera.
Well, all right. Carter can vibrate his eyes. That is definitely weird.
What does
You and
that
Dan
even-
should have a weird off.
What does
That
that
would be
even
great.
mean?
Vibrate his eyes while you're
What does
flipping off
that
the middle
even
toe.
mean?
I'll flip my
So,
tractor tire on down the road.
that extremely
Yep.
weird and awkward note, thanks for joining us here at the Zaner Ag Hedge MarketCast. If you need more because you just can't get enough of
Come
us,
back next week.
absolutely every week, same time, same place, kind of. Follow us on Facebook. One of these days we'll go live with this. But
Thanks for Ted for stopping in.
Yeah, absolutely. Special thanks to the Ted Spread, Ted Seifried, our chief market strategist over here at Zaner Ag Hedge and president of the Zaner Ag Hedge division, lending his insightful knowledge into today's. Right, he did all the work there. I mean, by all means, it's not like Ted and I or Joe and I sit there twiddling our thumbs, but definitely took the deep dive into the balance sheet to find where the rubber hits the road on the changes that mattered to today. And at face value, a much more bullish report than maybe, when you look at it, left you with some more questions on where some of those numbers were being drawn from. But hey, thanks to Ted for joining us. Anyway, if you can't get enough of us, follow us on Twitter and LinkedIn at the Zaner Group and on Facebook at Zaner Ag Hedge. If you've not already, check out the Daily Ag Hedge call-in where you can hear from that very man every single day. The price is right, Joe. How much is it?
$0 and 0 cents. Absolutely free.
Absolutely
for you.
free. You can find the sign-up links below and where they're provided here. The best part is it's free. You can find, thank you again for being here. And be sure to like, comment, and follow for the podcast, not to miss a beat. And we'll be back with you as price action develops, everyone.
Thank you.